Good morning, everyone. Happy Monday. This is the last week of the month. And as you are noticing, this week we're going to be running the Euro show an hour earlier because we still use Central Time. However, UK has already done the clock change. So for 1 week only, we're starting half an hour into the London session. Now, this is the last week of the month, so there are certain things that could happen, especially because we have the FOMC. But before we begin, let me introduce myself. I'm Market Stalker D. Even though I look like a kid, I am not. I've been trading for almost 20 years now, and I'm a commodities trader. So I specialize in metals, various metals, not just GC, and also energies markets, which were my bread and butter for about 12 years. All right, so let's start with gold, because I know a lot of you trade gold. Gold, it looks like it sort of found a bit of a breather from this crazy upside that it's had for quite an extended period of time. This is a weekly chart, so it's pretty massive. And I'm still looking at the area around 40.40. As a potential stopping point and area of interest at the very least, to see whether we're going to have a complete change in the outlook of gold, or whether that's just going to be another area that the buyers might be looking out for. As always, this is all for educational purposes only. Please make sure to familiarize yourself with the risk disclaimer that Bruno posted earlier in the chat. Now, with all of that out of the way, let's focus on some more intraday time frames. So that's the daily overview. We already had a pop into this area. Didn't really bring us much of a reversal. So now we're heading back to that point of interest. Looking at the options activity, in and around 40.20 area, we do have a potential gamma flip level that could be of interest. And really up here, we don't really have too many areas of interest just yet, at least looking at the options chain. I looked at what gamma condition we are starting the week in. We are starting with positive gamma. Now that is not directional. It just means that certain areas that we come across from the options chain, we would expect them to be hedged against. So if something falls, we expect the market makers to step in and take it back up. But yeah, like I said, I don't really see any relevant levels. The level with the highest concentration of open interest is currently around 40.80. And then aside from that, we have 4100, which is a put wall, so to speak. So maybe some shorts there. But really, once we get below 40.60, there is nothing until that 40.20 area. So pretty interesting. Pretty interesting. Let's have a look at the value areas and quantitative extremes. How's that doing? Now, the value areas from Friday, because of the clock change, it's all going to be a little bit messy. So if you're using anything of this similar like I do, I would be very, very careful just looking at those levels, and please match the price action because otherwise you're just kind of staring at random levels and not really seeing where the market structure is. So just looking at the 30-minute time frame, so let's go down. Currently, I mean, we're technically inside the London value area. And leaving COMEX all the way up at 41.17, so basically above that put support level. VWAP is looking really flat at the moment, really, really flat. Like there's not much there. So if I had to guess, maybe a bit of a pullback and then further downside. But it all depends what they want to do with this. Obviously, this run up that happened on Friday. Was that Friday? It was Friday. That was pretty much completely obliterated. Was that a Friday, 24th? Yeah. So yeah, for now, bulls are not able to keep this up at all. Now, looking around the other products, something caught my eye. So we have copper that has actually made a gap up at Globex Open. So that's kind of interesting because if I look at copper on the weekly chart, we're well on the way to take out at least 50% of this this big move. Have we taken it already? Yeah, so it's sort of bouncing from the 50% of that move. Now, I don't use the 50% on low time frames, but I will look at them on very big time frames because they can be pretty decent sell-off points. However, all of this area is very, very thin volume that you can see on my visible range volume profile here. And yeah, and then intraday levels can kind of give us a better picture. Daily chart also a little bit bullish with, again, a hole, a cave in between 529 and 514.940. So if you want a visual representation of that, this is what they may want to hunt first before they do anything. But at the same time, we do have a gap that we opened with, and that's visible on a 30-minute time frame. So if this gap cannot give us some support, I would expect a gap close to happen first, and then maybe we can fish for longs further down. When I look at the COMEX value area, that is all the way down at 514. And then towards the inside of that value, we have the average daily range low at 512 roughly. And then to the upside, if this starts running, there is 529 to the upside would be ADR high. So interesting outlook after the CPI that was released. Now, copper is very sensitive to CPI and PPI release. And this week we also have the FOMC rate decision coming up because you know, that can also be of interest because obviously you have the monetary policies that affect the inflation and everything. So that could be a bit of a mover on our friend copper here. And what else do we have on the calendar? Ah, yes, for those of you who trade DAX. Now, I did a DAX scalp short this morning since I was awake and getting ready. So on Thursday, we do have the rate decision from the Eurozone. My time, it's 1:15 p.m. and I'm in England. So that could be a really big one for DAX. So I wouldn't trade directly into it. And it might be on the day, so on Thursday, it might be a little bit quiet if you're somebody who likes to trade DAX like I do usually. So yeah, try not to trade directly into that. That would be my main thing. And then towards the end of the week, because we have end of the week, end of the month, that could bring some unwinding moves, especially considering we also have FOMC. So let's have a look at equities for a second, because I do have them on this account. What I found interesting is that ES actually has a gap up. So now that's like a visual eyesore that I think they want to deal with before they do anything. So it's a similar view like copper, obviously completely different product and asset, but I really wouldn't be surprised if 68.66 melts and then starts going at least towards this 68.42. I mean, technically gap fill would be all the way down where the market closed on Friday, which is down at 68.25. But I found with equities that have a stronger upward bias is that more likely than not, the top is what is considered a gap close, right? So the former high. So really 68.41 will be something to look at. And then let's have a look at the options levels, whether we can find something there. 68.40. I mean, I have a GEX 3 level at 68.25, which actually matches the close on Friday. Interesting. Yeah, let's put that on the chart as a visual. And again, I'm not a core equities trader, apart from DAX trading, but I don't really touch too much of the US equities these days. Sometimes I trade YM for power hour, but it's only when we have like hugely positive or hugely negative delta, and then I look for the short squeeze or long squeeze. But yeah, 68.25 seems to be pretty high level of interest. So yeah. To the upside when it comes to equities, I don't know how much space we really have to the upside, to be honest. The core resistance, the call wall from slightly further out options is at 6,900 from the end of day reading. So that's pretty much wicking, you know, if we imagine they want to hunt that. And this is where the options are pretty powerful, because you don't actually need any price action to the left to see where the interest is. So that's why I love looking at options chain for gold and or equities if they're at the all-time highs, because it's probably one of the only concepts that can actually tell you where the institutions are positioned once we run out of things to look for on the left-hand side. So when the levels are not there, most people will struggle because it is all-time high. But this is actually a pretty good way to figure out where they want to go. So how much higher? Well, that's the first point of interest. And then not much else. Like above that, we have some GEX levels with slightly lower concentration. They could become bounce points, but you know, we are currently in positive gamma on ES, so that would mean that they want to hedge along the any level that comes up until that changes, and it could change in an instant because that's just the nature of markets. As always, I'm going to be looking for asymmetrical opportunities, so I look for slightly higher risk reward, not like necessarily 1,000,000 to 1, but you know, my thing is always singles and doubles, unless we have some big swing trade on the cards, because we're either coming away from a massive supply and demand level on a larger time frame and things are starting to run in the same direction. And whenever you get those areas, you tend to have those single direction days that just keep going a lot more often. So again, that's an asymmetrical opportunity in and of itself. Now, talking about that, let's have a look at natural gas that will roll today, because I just looked at some of my other platforms, and it did still trade in the November contract last week. But I see that the volume has actually rolled into December. So I'm guessing that TopstepX platform will pick this up once we get closer to NYMEX, but not yet. However, on this new contract, I mean, and on the old one as well, you can see that we had a pretty fierce move up. And what was really interesting, I was trading this on an intraday time frame, and all of this happened in the last 30 minutes of NYMEX. So it was a pretty kind of quiet-ish day, and it was very interesting to see it do what I've been trading for many years. So this day range fill half an hour into the close, NYMEX close. Now, if you don't know what settlement is, it's different than the actual market close, but in the olden days, they used to close the pit right at settlement time. So you couldn't actually open or close new trades anymore. and that used to be like the reference. But nowadays, obviously, there's electronic trading, so you can still trade, but it will be much slower. On Friday, the classic day range fade, fade the move, happened. Everything else was a bit meh, 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 and then we come to the last 30 minutes, and it goes whoosh. It actually continued past the settlement, so I don't know whether we maybe had some news. Maybe in relation to Russia or something. I wasn't really paying too much attention to the news at that point, because this is a technical expectation, maybe a little bit more violent than usual. But this is something, these kind of strategies, like the fade into settlement, that's kind of where I made my career. I've always been more suited for the end of day trading. Like for me, the more hours that I have for data, the better I get with figuring out what the prices want to move. So now that we have that, the weekly time frame has actually changed the outlook. And even though we still have a wick down, we did go over 350 on the old contract. So I'm just tiny bit long biased here. Now that doesn't mean that we might not end up chopping around on this big time frame. So maybe we want to go all the way down and retest 310 area before we bounce. But this is now definitely a reversal, very confident reversal from the weekly demand area, and that's something you want to take note of. Now, when it comes to intraday levels, let me find it. And, you know, on Mondays, I don't really rush into things. I used to when I was younger, and then you get bitten one too many times, and then you learn to wait. But yeah, Mondays for me are get up, be in observation mode, and once the setup appears, for me, it's usually quite obvious. If I can't figure out an obvious setup, I probably shouldn't be in that. So let's have a look at what we're working with. Now, again, we're going to have that messy daylight savings thing, although since natural gas mainly trades on NYMEX, that's kind of like the big session. It might be a case that the daylight savings is not going to affect it more. I think it's probably more going to be affected for DAX and maybe even metals, because they kind of start a little bit earlier and they trade through Asia and all that. So, so yeah, maybe natural gas won't be too big of a deal here. But just looking at NYMEX values, which might be a little bit not accurate, but it shouldn't matter all that much because right now we're still inside value. And the value high that's for NYMEX is 4 evens, and then you have 391 as the value low. Right now, Asia is actually defining the day bizarrely. So let's drop down to a 30-minute time frame. You'll see what I mean. Now, why do I say that? So I'm just going to put the that's not what I wanted. Just going to put, now because we don't have the new contract yet, this is not really that relevant, but the prices, but the composition of the visual reference that we want to do here before the contract rolls, it's still going to be the same. Like the new contract is a little bit more lively, obviously, because more people are trading it now, but basically the average range high is kind of set in this area, and we right now we did actually tag it. And now we're going all the way to the opposite side. So where is the average daily range low? It's right in the middle of this candle. So I'm not going to call out prices because, again, this is the old contract. So it's not going to matter once this rolls, and it will roll as soon as our American friends wake up. But yeah, so for now, Asia is defining the range. Now that's a little bit unusual. So obviously we have these Friday lows that are looming and lurking, and that could become an area of interest. Now at 320 old contract, I do think we had something at 325, but I don't think that we had much at 320. But for today's levels on the new contract, I would probably expect, actually, let me do something just for a second, just so I can match those areas properly. Yeah, so 325 on the old contract is actually the 390 for the new contract, right? So that is one of the areas of interest. And then the next one, I would say it would be 385 on the new one. So yeah. Shubham says, I'm confused due to this timing change. Can you explain? Yeah, so UK has a different daylight savings schedule than the USA. So we can have a look at Google, our friend Google. Is it the Google? It's just Google. Is it like a person? It's not the Deeyana, it's Google, Deeyana. The Google. Or maybe it's a deity. Is it a deity? I don't know. It's the Google, like the Picard. To know whether you're a fan of Star Trek. Okay, so let's have a look at Google. Daylight savings UK versus US. Clocks fall back in the autumn to standard time, so we become GMT. In the UK and Europe, this takes place at 2 a.m. on the last Sunday in October. But in the US and Canada, clocks go back 1 hour at 2 a.m. on the first Sunday of November. Now, in March, there's actually a 3-week period where we sort of lose an hour, and before the USA basically switches on the day, or it switches it off. I never know whether they're switching it on or off. I suppose in the wintertime they want to give maybe farmers more light or something. But yeah, there's this like different schedule, especially now for the autumn, but it's only for 1 week. So we run these streams, all the overnight programming runs on Chicago time because Topstep is a Chicago-based company. So we last year decided to keep this at the this Chicago time to kind of avoid confusion. Now, I'm actually interested. Let's do a little poll if we can. How many people are stateside and how many people are Europe, Asia, Australia? So let's just see generally what, because I know that a few people are kind of like night owls and stuff. Mr. Jut said, hi Deeyana, how many accounts are you funded with Topstep? I'm a live trader, so I can't do the XFAs. And this early in the morning, I find that, because we were supposed to run these streams, I'm going to say this for a millionth time, we were supposed to run these streams for DAX trading, and then we had trouble, or the team had trouble implementing DAX data feed into whatever they were doing at the moment. Or at the time, and they're still sort of struggling, but they do have other things to take care of. So at some point we're going to be moving this show to a new time slot. I don't know when, don't ask me, but yeah, so it's the matter of me wanting to trade DAX for this time of day, but I couldn't. So this is why for my live account I focus on the COMEX and NYMEX session, where these products, copper and natural gas, RBOB, sometimes crude oil, they tend to liven up. Usually on most days there's not that much happening, and frankly my edge for those particular products is not this early in the morning. It really isn't. But I do have a strategy on DAX that I trade very consistently in and around this time, and many times when I'm doing the live stream in the back, I'm kind of watching what DAX is doing, and quite often I will actually do a DAX trade in the background. But there's no point talking about it because we can't see it on Topstep, so it's like, you know. So yeah, so I only have one live account with Topstep, and that means that I cannot have XFAs, so I can only have one live account. But I had 3 XFAs before on the last run before I got transferred. And I only stayed in the XFA for like whole 40 days. And I've held the live account in some shape or form since, on the last run, because I've been with Topstep for like 10 years. But last one, I held it from December 2023 until, well, really February this year. And then I went back to the XFA stage with the approval of the risk team, and then I only stayed in the XFA for 40 days, and then I was back in the live. So, cool story. Not really. What is DAX futures called in Topstep? It's called nothing because we don't have it yet. I know they're still working on it, and I know that people are like, no, we wanted DAX. No, where's DAX? Look, guys, they have other things that they are sorting out. You know, obviously, we want to make sure that the platform is pretty spot on with data feeds and everything, and we're not going to be implementing new products that trade in euros per tick. And yet we have a USD dashboard that can cause some issues. So just be patient, it's fine. But at the moment we can't trade DAX on Topstep. So I just traded on my own account. Let's have a look. Compared to usual, how much more volatile is gold right now compared to NQ? I would say they're about the same at the moment. If I look at the average ranges for NQ versus gold, they're actually coming pretty bloody close. So NQ at the moment has an average daily range of 1,344 ticks, whereas gold, give me a second. Gold at the moment is tagging 1,262. So this is why I have actually moved away from gold a bit, because I found it, because I like to use bigger stops as well. That is how I'm able to get my larger risk reward. Obviously, I'm pretty selective with the setups I take, but I found that unless I use like a 200 tick stop, which means I would have to just trade like 1 micro and still risk $200 to $300. That's a lot. So for me, that's it's gone a little bit crazy for Granny D over here. I'm 45. I'm not, I've been doing this for nearly 2 decades as well. So I'm not a new trader. I get annoyed with products that are really kind of jumping all over the place. And if you look at gold, and if you look at how the price action behaves, you will see that it's very spiky. Spiky. Now, each of these candles, we can have a look at the ATR here. Yeah, already, so not sure you can see that. Let me remove my face for a second. So if I change this to like a yellow screaming color so that everybody can see the price. So if I look at what the average 30-minute candle range is, it's 157 ticks. 157 ticks. And the way I create my stops, I actually want to be able to absorb a 2 30-minute candle. So this puts me immediately onto like a crazy stop loss of like 250, 300. And when that starts happening, it's time for me to sort of bow out of that product and wait until it's less crazy, okay? It's just how I am. It doesn't mean it's not going to work for you. But for me, super volatile products that are going up and down, like as one of my Australian traders says, like cover your kids' ears, up and down like the horse drawers. His words, not mine. And that's a very good and apt description of the price action. I mean, look at this candle. This is Globex Open. Is it Globex Open? Yeah. This candle is insane. So, like, how do you limit risk here? And even if you maybe decide to get into this area, let's have a look at the size of the stop just by pure price range. And the way I trade, I like to use my stop loss. I suppose the easiest way I could describe it is the second high for shorts, for example, it would be the second high from the nearest one. So not this one, but this one, right? So let's see what price range that is giving me. And I also like to give it a fair amount of time, space. And I also don't like my stops to hit any round numbers. So now we have the round number at 120. And in order for me to kind of avoid all of that, I would probably have to put it at like 123.7. Like, I like those weird numbers for the stops because I find that they're not hunted frequently. And if they are hunted, in that case, I'm usually completely wrong on my trade. So I would need like a 250 tick stop. Like, I'm just not comfortable doing that. So yeah, and then the stress of it jumping all over the place. So gold can reward you just like NQ can. It's just for my liking, it's gone over the tradable aspect because of how fast it can flip on you. Because gold is a very double-sided product intra-candle. So it's not like copper that kind of decides on the move. And then once you get towards the end of the 30-minute candle, you sort of know that that's not going to flip on you in the last few seconds. But gold, it can look bearish for like 29 minutes. And then in the last minute, it just kind of flips. So that's what reminds me of NQ a little bit. And to me, that just spells a ton of risk. So I've actually moved my efforts to, at the moment, to copper and NG. So natural gas and copper are what I've been trading most recently. And that's pretty stress-free. I mean, copper is very smooth. And yes, there are some days where it's pretty quiet, but you can still like grab, 30, 40 ticks, even if it's not moving too much, as long as you are very good with situational awareness. So I don't have a big problem with quieter days. However, some people do. I know that for many people, quiet markets can give you some pretty loud lessons because you'll be sitting there waiting for something to happen. You start seeing that the time has gone by, you're still in a trade, nothing's happened, and then you start to doubt yourself, don't you? You're like, is this right? Like, should I even be in this trade? And then a whole bunch of inner critic nonsense comes out. Then you start to move away from the setup. And now it's not about the setup. Now it's about stuff that happened to you when you were 3 years old. And you start to project all of those insecurities onto this poor little trade that doesn't even know how much weight it carries. But yeah, so from the perspective of quieter markets, you have to be pretty good at situational awareness, and you cannot flip and flop on the direction. So if you're wrong on the direction, you have to just, on a quiet day, just kind of walk away and just go, okay, well, that didn't quite work. But it doesn't mean it was a bad setup. It just didn't quite do what I wanted it to do in this particular time span. Does that make sense? Compared to, okay, I answered that one. Did you used to trade for an institution? Yes, so I never traded for a bank per se. Well, there was a company that was sort of subsidized by First New York. So that's kind of the closest I came to. I never traded for a corporate side of things because I don't like the corporate world. I'm a former rock and pop musician. And I did that for 20 years before I even went into finance. So the whole, power suits and, I had crazy hair colors up until very recently, just before I got sick, I still had like flaming red hair with like a black piece over here. I used to have piercings all over my face. I don't know how many people know that. I had a pierced eyebrow. I had a pierced like top of the ear, like I think you call it helix or something. Never pierced anything on my nose and lips because I was also a saxophone player. I mean, I still am. I just haven't played for years. And if you're gonna pierce your lips or something, then obviously the air would just kind of leak. So that's not a good choice for wind instrument players. But yeah, so I had the eyebrow pierced for many years, and actually my very first YouTube video in 2015, so it was a very, very long time ago, you will see me looking about 12 with massive purple emo hair. So that was me up until very recently. And the only reason why I stopped with all of that was A, I got older, B, I was in finance, See, I got gray hair, so now I'm actually trying to grow out my gray hair because I think that's gonna look pretty cool. And I'm kind of sick and tired of dyeing it. Having fashion hair colors is very labor intensive. I don't have the energy. But yeah, I never really worked for an institution, so I was never in sort of like a proper bank or a hedge fund or anything like that. But I really enjoyed working for prop companies because prop is kind of like the cowboys of the financial world. You know, nobody asks you to power dress, or you know, everybody most of the time just does their own thing. It's very relaxed, very non-PC conversations, which you know I love. I mean, we have to be very nice on the stream. You know, we're trying to keep it PG and everything. But if you were a fly on the wall in a prop the conversations that flow are very non-PC and very much a lot of dirty jokes and double entendres and just craziness, and you know, so it's you know, it was something that was very close to my musician world as well. And bizarrely, a lot of musicians go into trading, and there some of them are pretty successful, especially if you were like a high level musician. I think that transfers very well to what we're doing here as traders, because music is also a chaotic environment, right? So you do have some rules, like you have scales and stuff, but if you're ad-libbing, pretty much all bets are off, right? You can do whatever you want. However, there's still some kind of a shell of a move, and you know, a chord progression or something that you have to follow. And that's kind of the same with price action. And in fact, the first time I laid my eyes on charts, when a friend of mine showed them to me, I was like, this looks like music notes to me. And I was like, I need to know everything about this like yesterday. And I got obsessed because I'm not like OCD or anything, nor am I neurodivergent. I really am not. I'm probably pretty normal. I'm a bit nutty because I was a musician. Obviously, nobody who's totally normal does that. But I think that sort of focus and interest, maybe it's a curiosity thing, I don't know. That's what kept me going. And you know, it wasn't even, oh yeah, I'm gonna make a lot of cash. I started it because it was a curiosity to me. I'm like, we're seeing like the psychology of almost the entire human race through this little chart. And I couldn't shake this this thought that if I became, it's like a weird flex, you know, if I became somebody that can actually read and somehow make this work, I will be in the minority of the population. And with musicians, we're kind of the same thing. It's like if you can reach that top of the skill set where you can like shred the guitar or play the sax crazily fast, that is what you strive for. It's almost like a competition between yourself. It's you versus you. It's like, I did it fast yesterday. Can I do it faster today? So I think that's why it keeps us, yeah, it keeps us going. Jay says, what is your most traded instrument? Like, look, if you asked me the same question about 5 years ago, I would have, without thinking, said crude oil. But as it, you know, as it stands, markets are in constant flux. So something that I found with crude oil is that it went from this beautiful volatile product that would give you like 300 to 400 ticks per day, nearly every single day. At the very least, it would give you 250, 300, right? And then some days it would go a little bit more. So we had 500 to 600 ticks, and then we had COVID. Everything went completely nuts. I saw it fall 2,000 ticks one day during COVID. And then that was still beautiful. Then they stopped it. At that point, I'm like, oh God, now I need to go to other products because the futures on crude oil went negative, and you know, my main product disappeared. So I'm like, no, what? And I went to trade a little bit of equities. Then I focused a lot more on trading gold. Started looking at platinum at that point as well. But really, you know, you will find that if you do this long enough, your product will go through extreme volatility, extreme low volatility, and normal times. And what is normal actually changes as the eons go by. So when you are, you know, looking at NQ now, Well, let's have a look at ES actually. So ES right now is moving. Let's have a look at the average daily range and the daily. Right now, ES has 81 points on average in every single day. But if we go back in time, in long enough, I don't know how far back this goes. Probably not far enough, to be honest. Let's see how much history we have. Because I'm not sure we can go all the way back, because this probably, yeah, so this only goes back to April 2020. That's not enough. So if you were to have enough history, and I do have some platforms that have that, so if you go back to 2012, 2013, when I became a prop trader, ES had a range of 4 to 5 points per day for the entire 24-hour period. And then you would get like maybe one day where it would move like 20 points, and that would be like a big day. And now I'm looking at it on like normal days. It's like, oh, it's 81 points. So that's a massive increase. And that kind of started happening during COVID, this like expansion of the liquidity. And then it kind of stayed. It settled down quite a bit, but then it settled into this new sort of higher liquidity product. So that's what's happened, right? So you can't always just go one product, because if you do this long enough, you will come across a time where the product is either too crazy to trade or too quiet to trade. That happened to me with euro dollar, because I was a swing trader that started trading in 2007. Traded pretty fine for 5 years, made a ton of cash on it. Then 2012 came, then European austerity measures came in, Greece went bust. And for a time, again, euro was moving, and then they just locked it down. And then it was watching paint dry as euro barely makes it to 30 pips in a day. So I had to move, right? That's how I went into prop, actually. So yeah, getting too married to any one particular thing, it's okay when you're just starting out, and this is like your first maybe 5, 6, 7 years of your career. But the longer you trade and the longer you stay around, you will notice from an intraday perspective, things will change at some point. And that's where you have to have a solid strategy that is ideally transferable to something else. So if your strategy is only trending on something like gold, trending upside, yeah, it's been doing that for the last sort of year or so. But is gold going to be trending upwards towards 5,000, 10,000, 100,000 forever? Maybe not during our lifetime, but eventually gold will come down to settle into what used to be its normal range. And I can tell you right now, the gold used to trade in about a 250 to 300 ticks average daily range. Now we're over 1,000. So, you know, what is my most traded product will depend on the situation. But I don't look at 20 different products. This is not stocks trading, right? Where you have to look at stocks in play. That annoys the hell out of me. I would be usually focusing, like I have probably about 6 or 7 things that I'm looking at. So let's have a look. I have crude oil now for reference more than anything. I don't really trade crude oil that often because it's too slow for me. And there's that side of things as well, too slow. But let's say I look at that, and RBOB, which is gasoline futures, is one product. I also look at heating oil every so often. It's not something I trade every day, but I will trade it every so often. But let's say the energies markets, we have 3, right? Then out of the metals, I also have 3. So I have copper, platinum, and gold. Sometimes I look at silver. Again, silver is less crazy than gold, maybe something to consider. But I would say that even micro silver on something like a 50K combine is still too expensive. It's still $5. It's kind of like platinum, but they're calling it micro. And it's like full platinum contract is 5 ticks, $5 per tick. Micro silver is also $5 per tick. So is that truly a micro? I don't think so. So yeah, micro copper on the other hand is a very smooth, very normal price action. but it can be very slow for some people. You know, if you're an adrenaline junkie and if you're just doing this because it makes you feel alive, then maybe go and do bungee jumping. I wouldn't necessarily express that kind of excitement. But yeah, for me, copper is great, and you can truly trade a micro. It's $1.25 with an average range of about 220 ticks in a single day. Obviously not every day, because if it's very quiet, there's nothing else going on, and you misread it, you will be stuck in about a 50 tick range. But you know, for me, I read profile, I read the quantitative extremes, I see what the options are doing and how far or close together the options are. So is it going to be a chop, or is it actually something that we can take advantage of? That is a part of situational awareness. So the more you can develop that, the more transferable your approach will be to other products. How do you trade a zone that has not been traded before? That's a very good question. So I would say, for me personally, I do two things. I look at the options chain, and I will look at quantitative extremes. So quantitative extremes is basically average daily range or average session range, because those don't need price action to get projected onto. If like, let's say ES goes into a trend, I don't need a previous high to tell me that there's room up to the average daily range to the upside, especially if, let's say, we have 6,900 that is hanging over our heads as a longer term call wall, right? So do I have anything to the left? No. Why do I say 6,900 is the first point of contact? Well, because that's where the open interest is in the options chain. I don't need the left side. So that's how I approach all-time highs. They, for me, work very well. I convert ES options into DAX, and they even work over there. There's some differences, obviously, but all of the equities, especially the major ones, they're somewhat correlated, and they will move at different times of the day. They might have different volatility to them as well, but they will still be heavily, heavily correlated. So, yeah, I really like it for that purpose in particular. Gold moving. Yes, I can see. I'm watching it. Do I want to be in it? No, I do not. Especially not. And again, look at gold. Look at what it did on a 30-minute time frame. 15-minute even. Look at this. So it just touched that daily demand zone that I plotted a while back. But let's see what size on this candle is. Lovely. It's a 411 tick move on a 15-minute time frame. So you might see opportunity here, but I see risk. I see risk. However, you do you, you know. To me, this is just crazy. It's like, and then it pulls back halfway through the candle. So however you spin it, if you were long or short, unless you caught it like towards the extremes here, like let's just say, oh, I'm going to go to a breakout. Would you not be a bit scared that if your short fell all the way down here and then wicked back up? Because I like to hold my trades. How can you hold your trades when this is happening? And let's see what size this is. Let's grab the price range again. Great, 230 ticks on a 5-minute chart for this pin bar. What about 2-minute chart? 2-minute chart is my favorite. So how big is this one candle? Again, 231. Do you like 2-minute charts with 230 tick candles in it? Because I know that I can't keep emotional regulation throughout that sort of a range. But if you're a grasshopper, if you're like in and out, that's great. But that's not necessarily a strategy unless you have 10,000 trades that were all done on similar setups. So same setups, maybe like you have several. And then you traded for a full year doing 30 to 40 trades a day, and then after 10,000 hours of 10,000 trades, not hours, you will know whether you have an edge. So 10,000 hours across 1 year, 10,000 trades across 1 year. So time has to be the same thing, because I know that I've seen some of you going, oh, this is 10,000 in a year, but no, I actually said 1,000 trades as a minimum, but they went, oh yeah, this says 1,000 trades in 3 months, but I do 1,000 trades in 1 week. It's like, that's A, not a good thing, and B, defeats the point of me saying that time is a very important component. If you don't have time through like different volatilities and whatever happens throughout the year, summertime, Christmas time, March, slow down and complete dry up over summer, and then yes, sometimes Trump tariffs. Have you really tested your system through multiple different sentiments of the market? No, you have not. So anyone who's claiming to me, yeah, I've got 90% accuracy, maintain that on a single account, trading your, million trades per day. I will be like, okay, you are a market maker. Let's give you a job. Okay. Until you have that, if you're basing your accuracy on the fact that, oh, you didn't blow up for 2 weeks and then you had 90% accuracy, but then you blew up, that's not the same account anymore. Why? Because those blow-ups, you have to count them into your journal. Otherwise, you're not taking in the full picture. You're basically trading with nice sort of pink glasses, so where you're like, oh my God, what I'm doing well, I'm doing so well. Hey, if I was looking at my stats like that, I would always have like 85% accuracy with 3.5 R average trade. But that's not the 18 years of my career. 18 years tells me that when I suck, I have to have a 2-to-1 risk reward, because I fall down to 43 and 40% accuracy. So if I'm then still using a 1-to-1, that is losing. So I base my risk models on the worst case scenario where I effed it up like royally, and seeing how I would have survived that, or how I did survive that, and what did I do to drag myself out of it. Not the other way around. It's like, oh, when she's smashing it, she's got, 80% accuracy, super high risk reward. Yeah. Can we be more unrealistic? Do we also believe in unicorns? Oh, look, a unicorn. Yeah. But hopefully you get the drift, right? What is, okay, hold on, let's see, let me catch up. I wish I knew about funded accounts back in 2015. My 2017 margin call would have been a blown funded. Yeah, exactly. I mean, prop accounts really do mitigate risk to your own capital. And, I don't know if a novice trader should even be trading their own money ever until they prove themselves in one of these prop accounts. And luckily I came across Topstep in 2015. So I was chuffed to not have to put my own cash whilst I was still a relatively new prop trader. Because remember, I was a swing trader for 5 years. It's not the same game. It's actually easier because you can there's no time constraint. So on swing trades, you kind of just let it do whatever it needs to do, and usually have very wide stops that can absorb a lot of the intraday whipsaws. And then you get to swing to do intradays. And it's a whole different ball game. Like, you have to be a lot more accurate. The time of day has to be right. There has to be enough volume for something to get pushed in your direction. And if any of that is not right, and then obviously you have to stop yourself from over trading, because obviously intraday, if something doesn't move, people then flip direction. It's like, but that's not your plan. It's not either or. It's if this happens, then this happens. It's not like, oh, we flip and flop around the same level and then we go long and short and mess things up and dig a hole for ourselves, and then it moves. It's like, no, you need to have a direction. So trade has what, 3 components: direction, what you want to, a level. So direction, level, and price action around it. Something on the tape that's going to make you go into a trade and say, yeah, this is what I'm looking for. If any of that, again, is not in place, you will struggle. Because if you go, well, I've got a direction and sort of a level, and then it gets to a level, touches it, smashes through it, and you want it to reverse from there, but you entered anyways because you didn't wait for anybody else with bigger pockets to actually turn it around, then that's, to me, just guesswork. You might as well just go and get a crystal ball and just say, I think it's going this way. You know, this is a game of probabilities. It's not a game of fortune telling. So, you know, if something has a 50-50 chance of working out, I am not going to take it. Because I'll be like, I'm not interested in taking 50-50s. I want to take asymmetrical opportunities. This is why I wait for like a half an age before something comes up. And why I do such an in-depth analysis, because it helps me. And then I can get my big, nice moves of catching, you know, in quieter markets, let's say 70 ticks, but that's a 2R setup in quiet markets for me. And then if I'm going to identify an opportunity where we can have more than that, that will usually be from points of interest. Like, let's say on natural gas, I think this week we may have a day where we carry on long into a unidirectional day. That is an outlier. But again, I don't know. Nobody really knows. So probabilities are there. We just need to read what is happening. Okay, so now we have copper smashing through that low. Now I hacked this this fib tool here so I can draw things randomly. So now that we are sort of in a downtrend, I would still look for the close of this gap on copper, but I would need to see a bit of a retracement. So let me see where the options are. Do we have anything up at 520? Because that's what VWAP is. VWAP's still flat, but you know, it is somewhat a lagging indicator. Yeah, so we have GEX1. I would like to see it up. Hit GEX1. Do we have any other price action? No, that's pretty messy. Okay, yeah, so maybe 520 tests. Let me just actually scan through some of the time frames here. Just see what's going on. It's not a real swing. Oops. So yeah, the perceivable swing, really, this is not a real swing. This is more like a sideways movement. So yeah, that's the only thing I really have. Right now we had a reversal. So we had an exhaustion candle and then a return into range. If that holds, then this could be the Asia liquidity grab, Asia low liquidity grab for London. Yeah, so James Whiting says, you need to lose to be able to analyze and create a system. With props, it's too easy to just buy again, whereas a personal account, you will put the work in because it's a lot more risk. But I disagree with that. Why put more risk when you can do the same work for cheap? I think that's a bit of false economy. So I do agree that, you know, learning, I just think that emotional side of trading your own account, especially if you're not, like, look, if you're a well-capitalized individual, right, and you can easily plow in like 5, 10, 15, 20 grand into an account to lose and not be bothered by it, then yeah, that's probably not too bad of an idea, especially if you're going to trade small, and especially if you maybe, just maybe, use some sort of risk management system. Because I do have third-party risk management software that I would never trade my own account without. Because everybody can malfunction. And then what? Well, you need to have something that stops you. Very simple. And then your brain goes, oh, I can't trade anymore. What do I do? Can I change it? But some of these guys that have created these softwares, they thought of that too. So they remove folder until a certain time of day when you can access it. It's kind of like the risk setting here. So if you lock out risk settings for the day, I do wish that they could give us weekly lockout as well, and even a monthly lockout rather than just a daily, because I know a lot of people forget to do this. And then in order for all of this to work, it has to be liquidate and block, liquidate and block. If you use the personal profit, I don't typically, I literally work on maximum trades per day. For most of them, it's about 5. If it's a range day, I will give myself maybe 10. But generally, I try to be one and done, only if it's a range day. Or I see that there's more opportunities, but only in a range across a couple of things. Then I will trade more. But basically, 5 is what I go for. If I can't make it work in 5, that is the end of the game for the day. And that's all right. Where do you find GEX levels? I find them on MentorQ because MentorQ is the only company out there that does commodities options as well. So I'm not much interested in equities. And for equities, you have oodles of choice, man. You have so many companies that are offering it. But for me, that's no good. It's like, what do I need SPX and SPY levels for when I'm looking at natural gas options? It's like, you know. We need that hit of caffeine early in the morning. James says, I do both. Yeah, so do I. I think most of us who have been around for a while, we do both at this point. I actually have a corporate account. I have a personal sort of YOLO account. But it's not that YOLO. Like, my YOLO differs a lot from other people. Other people's YOLOs is like, let's go full port at Globex Open on a Sunday. I'm like, I'm still trading, you know, the same setups at the same times of day, but maybe with a bit of a bigger size on that account than I should. Bruno says, you make me want to drink coffee. Then drink coffee, man. Let's drink coffee together. Let's get really amped up and do like a million trades today. I only have like 2 espressos per day. That is it. Maybe I seem like... I used to have more, like when I could still exercise and I was a bodybuilder. I used to live off of like Red Bulls and stuff. Deke says, I think a lot of people have done both. Yeah, I agree with that. I lost a lot of my own capital in options before discovering prop firms, so I get the emotional risk and don't treat props like an arcade machine. Yeah, so you're one of the good guys, right? You are not a gambler, and you understand the power of using options that are available to you, right? So you go for the cheap prop account. Sorry, I'm just reading Bruno's message here. How can you have no coffee, man? Like, I couldn't function. Like, the first thing that I do before I wake up. So I have a hack, right? If I need to be like up super early, I will set an alarm about half an hour before I'm supposed to actually wake up. I will always have an espresso ready next to my bed for the morning, so I make it the night before. And then I wake up, I neck it, then I go back to sleep. So here's the reason why. Caffeine takes 20 minutes to kick in. So you can actually get a snooze in for another 20, 30 minutes before you wake up. And then you wake up all like focused and not groggy. And then I have water, sparkling water for me, because for some reason, regular water makes me sick. And yeah. Yeah, so then you get an extra 30-minute sleep. That's something to keep in mind. Yeah, if you treat prop accounts as a true educational resource and something that... So let's say we adjust your expectations. Instead of you going, I just passed the combine, it's my first time, I'm going to get so rich from this. Why don't we tweak this to like, okay, it's XFA, now there's no going back. Because if I go back, I have to go through the whole song and dance again. Let me see if I can make this last. let me see if I can actually get proof of concept in this. And if I fail to generate any alpha on the smallest amount of money possible, how do I think that I can trade with size and make money out of this? So let's be serious, right? Let's use it for what it is. XFA is like a live account that you open because it's got the ability to pay you out, but it also has more stress. And yes, there's ways to reset it now. It costs money though, doesn't it? There's a consequence if you want to reactivate your XFA before you get to a payout. There's a consequence. You have to pay a lot more. Otherwise, what's the trade-off? Time. Do you have to get back to funded? No, it's optional. But if you want it, it is there now. However, if you decide not to pay it, what do you have to do? Well, you have to spend more time. So now you have to pass another combine. And depending on where you are in your journey, back to funded might be a choice for you. But I really wouldn't do that if you're a novice trader. I really would not. Because it would be one of those things where you're like, oh, I'm not throwing money at a problem without actually knowing whether I have proof of concept. Let's just see what this wants to do. Maybe I want to go for a little rotation trade here to the long side after the smash. Let's see how this works. This is just a combine. So basically a bit of a risky trade. Why? Because we went below the Asia low. We're kind of dragging back into the range now. It's a bit of a punt because I should be waiting until we're actually back into the range. But for now, let's see what we do in a trade. So I want to live through this to get more awareness about what is going on with price action and to see what they do with the visible range POC on a very low time frame. Are they going to start increasing volume or not? And if they don't, then we'll get out of this. But just want to live through the trade. We have somewhat negative delta on the tape. But we have tagged HVL, and we've actually gone over the highest volume candle, which was this one here. So if I mark that up, we're trying to get outside of it. And if I look on the 5-minute chart, I think we're already out. So this was the biggest candle. That one. And we're already outside of it. So let's see if somebody steps in and actually starts to rotate this. I'm probably only going to do this because I don't think it's moving that much just yet, but this is what I can see right now. We still need volume to come in though. Let's make this bigger. Because we're not old. So what am I looking for? If they start to move this, I would want this volume to go above its own moving average. But I am basing this on a 5-minute time frame of the highest volume candle that you can see here on a 2-minute chart, but we're already starting to try and go a bit higher. What is going on here? And on the other side of this move, we have the average session high London from the London session. So that's sitting at about 521.50. So much higher than this, but I am not expecting it to go that much this early in the day. So remember, this is almost like a tester trade to see how the price action behaves in relation to the price point that I picked just at random. And then that can sometimes give you or give me a pretty decent indication of whether there's any movement in there or not. So at this time of day, everything's pretty slow, and you can see there's a lot of inside bars, but we need to watch and do something. This is tradertainment purposes only. It does have merit because we did go over the Asia low, and we are trying to reverse back into it. But yeah, I figured we would have some ticks going up and down to look at. What do you think of Sierra chart? I mean, it's a platform. It's a good platform. You know, many people like it. I've never personally used it much. But yeah, it's a professional platform, so it's good. High volume says the biggest difference I've seen with live and prop is live account. Sometimes you get slippage where prop is 100% guaranteed slippage, it's built in. That's actually not true on futures companies. That is true on Forex companies. Forex prop firms are something that I've been warning against for many years now. I've told people to stick away from them. Some people didn't listen. They got caught up in the whole My Forex Funds debacle. And the only Forex prop firm out there that is decent is FTMO. The rest of them, no, just no. But futures gets their data feed directly from a one and only exchange, which is, everybody repeat after me, the CME, okay? It's heavily regulated, so you can't, even as a prop firm, if you're getting your data feed, the slippage that you call engineered slippage, that does not exist in futures. The slippage that you see, yes, maybe on sim accounts, you might be, you know, trying to simulate slippage, but there's no setting where it's like, oh yeah, let's get this one into an aggressive slippage. That's a Forex play. That doesn't exist in futures. Now, if you're talking about the live prop firm accounts, usually people trade with more size on live prop accounts. Now, trading 2 micros on your personal and trading 5 minis on NQ is obviously going to make the execution of orders a little bit different. And if you think that that's the prop firm engineering that in prop live accounts, you are very wrong, my friend, because slippage is a real thing and there's always worse slippage on live accounts, but the more size you trade, the more obvious that slippage becomes. And I've said this before, if you execute an order that is a little bit bigger, especially like in my products, let's say that I wanted to execute a live order of 10 minis in my live prop account. Do you think they're going to fill me immediately whilst we only have 2, 3, 3, nothing, 3 orders here? No. So what's going to happen is they're going to put me at the back of the queue because I'm now a bigger trader in this market in copper. And then until all of the other little guys have been done with their fills, then I'll get my fill. And then I might move the order book by about a couple of prices because you have to take all of the liquidity from the opposite side. That's how the order matching works. But the more, unless you pay for actual preferential fills, which costs like an arm and a leg, it's very cost prohibitive for normal people, then you might be able to trade with more size and get preferential fills. For all the rest of us mortals, if you want to trade with more size, you will experience more slippage because that's how it works. Smaller guys, 1 and 2 lots, they have preferential fills over you. You're at the back of the queue waiting. Does that make more sense? Because it's nothing to do with prop firms, right? But prop live is the same as any live account. It's not a separate exchange that only exists for the prop live accounts where they will screw you to the end of infinity. It's not how it works, okay? It's the same, like everybody has the same. This is why I love futures, because it's properly regulated. And it's, I mean, I hope I'm making this a little bit more lighthearted. You know, it's a serious issue, definitely a serious issue, but I'm trying not to make it so dry. And I'm trying to get my point across by using a bit of humor here. But yeah, so it's the same exchange, same data feeds. You know, you have, and interestingly enough, I don't know whether you guys know, but Topstep actually has direct data feed from the CME. They paid for that. Go figure. So, yeah. Exploit the Vibe says 1 mini is a YOLO for me. Yeah, I mean, for some people it is. It's a lot of size, right? In fact, a lot of the professionals that I know that make a very nice living of like 150, 200 grand a year, it's not like millions, right? But they are making a very, very nice living. They trade like 2 and 3, maybe 4 contracts. You don't need a lot of size if you know what you're doing. Yeah, high coach, 2 espressos, roughly 120 to 160 milligrams of caffeine. Yeah, exactly the same as one Monster Ultra White. Slammer Red Bull. Here's the thing. I actually react to the taurine and not like negative. Well, I don't know whether it's not negative. It makes me sleepy. So taurine and energy drinks. I drink a Monster and I literally want to go to sleep. So explain that one to me. Taurine acts as a sedative on some people. I'm one of them. So that won't work. I have to be like pure caffeine with some lacto-free milk and I'm done. Maybe for a bit of a boost, I have this like B vitamin mouth spray because I don't like taking more pills than I need to. And then I just spritz it a couple of times and then you have kind of like an energy drink. You have a B vitamin boost. And you have an espresso shot or 2. So yeah. Aaron trades. I thought I was a coffee addict. Espresso ready for the next day. It's amazing. Oh man, I can't live. I can't live without my caffeine because I'm not really a morning person either. Again, I was a musician for a very long time, so naturally, whenever I get up, I'm groggy as hell. Like any sort of thought. My husband sometimes tries to talk to me in the morning because he's like, ever since we moved to this place, he's like Farmer James. He like wakes up at donkeys at a really like sort of break of dawn sort of thing. And I'm still trying to sort of unglue my head from the pillow. And he's like, oh, yes, we should be doing this. And when are you going to stream it? And I was like, morning voice, James, morning voice. But yeah, and until I have my coffee, I'm just totally non-communicative. In fact, I've forgotten things that people tell me before I have the first coffee. Totally useless. And then I have the first coffee and it's like a different person has appeared. Aaron, are you the same? I'm a total coffee addict. If I could have more, like now that I'm like almost 45, it really affects my sleep. So I have to cut it off at like about 4 or 5 p.m. But before, when I was younger, man, I would have a coffee at like 9, 10, 11, and then I would just go to sleep. No problem at all. But, you know, our adrenals do get a little bit more stressed over time. Coffee. Yes, coffee. You're from New York. Plan the coffee and coffee the plan. I like that. Oh, good. Do you long smash? The convo early this morning was nice. Excellent. Great to hear. All right, what's the time? We've got 10 minutes. Long distribution should be up next. Yeah. Dick says, same, can't drink coffee at 5 p.m. Yeah. Getting old sucks. But it's also a privilege. So, you know, take it as it comes. All right, so we have a little bit of movement. So look at, can you see that? Yeah, you can see it. So look at the volume here, right? So here's, can I make this bigger? Can this go bigger? No. Let me try and make this volume slightly bigger. We have volume here. Just trying to see if I can kind of emphasize it. I don't think so. All right, we'll just have to peer into the detail here. So you can see that the volume moving average, so this blue bar that I have, we've now had 2 candles on a very low time frame, on a 2-minute time frame, that have gone over this moving average bar for the volume line, not a bar. So the bars have gone over the moving average volume. Yeah. Thought I was going to have to start that again. So yeah, that means that there is a little bit of increase to the upside, and you're kind of like really sort of reading the tea leaves in here, but it does bring eventually some sort of a push. I would like to see the same thing on a 3-minute chart, because right now we're trying to increase, but it's not exactly following just yet. And then hopefully it's just going to get one little pump through the VWAP and we'll be done. If that doesn't happen, it doesn't happen. In that case, we may be in for that gap fill at some point. But I am going to stay on a 30-minute chart because I've got, you know, obviously chat to read and everything else, and it becomes a little bit difficult for old Granny D to follow along with the price action when she's too into the minutia of the intraday price action. But yeah, so I do have a bigger stop loss. It's a 35-tick stop. So it should be able to absorb some sort of a drawdown, even though I think we already had the drawdown. The only risk is that we don't rotate higher from this endpoint. But right now, the reference swing point is up here. And I have my cue points on lower time frames for this purpose when we are in a range and I'm looking for a rotation or partial rotation to the other side. If I look at the profile, it's not very helpful because we are... Oh, actually, no. Let me change my times here. Let's change my times. Or actually, is it right? Where's it? 8 o'clock. There it is. Okay. No, that is right. Yeah, we're still inside the initial balance. So, and we're building some structure. It's actually so far turning into a D shape. So let me see if I can whack in a volume profile on here. So this was 8 o'clock. It's 8. And I'm going to go for the volume profile fixed range. I'm going to make it more opaque if I can. This is just a developing value, so it's not the same. But I'm just increasing the opacity so we can see things a bit better. All right, so you can see that it's building sort of like this D shape, a me shape structure. So until that really changes, we do have some sort of a range post to smash below the Asia low. In the longer intraday time frame, I do expect this gap to be filled today at some point because it's such an eyesore, and we do have some levels down below that will be up for grabs, but it's a little too early for that. So I do think we need to rotate, especially now that we failed to close below this entire structure. And we wicked it up with a candle that has wicks all over the place. But the important part here is that we're closing back inside the Asia range. This always, or most of the time, means that we're going to have some sort of a rotation, at least to VWAP. At least to VWAP. So this is an asymmetrical opportunity for a liquidity grab and a reversal. So there we go there. But we would need to see some commitment, and eventually we would need to see the extension of the initial balance upside. At the moment we don't have that. The initial balance is at the top of this candle. So we'll see what happens here. And Morningstar is in creation, but we have another 4 minutes before that's done. I would like to see a Morningstar a little bit stronger than this. So I would like to see this candle close above the previous candle, this doji candle high. And then we'll have a good reversal from this area. Even though you can argue already on a lower time frame, We smashed down, consolidated, and now we're trying to reverse. But even here, it's just barely breaking the volume POC. We really need to gain strength through that. Otherwise, it's too slow. This is why I like to trade closer to the 11:40 time period. That's when the LME opens. But yeah, at least we have a trade to watch. Daily bias is short. Yeah, I would agree, but maybe from higher up, which is why I think a rotation might be on the cards first. I mean, they might just smash it down. Look, this is why we have stops, right? But when we look at the 4-hour chart, I wouldn't trust this one because it's still in formation. So once it finishes, maybe we can have a look at it. But then daily chart, is this really bearish? I mean, we're coming to the top of this range here. And we have this high sort of looming over us, going, we're here. Here we are. And they sort of almost tagged the previous day's high. But yeah, I think as a structure, this is one big range. I would be long-term bullish, so maybe not today, but long-term bullish because I do think that we are going to track through this area completely. We have this hole in the profile, low volume node, single prints, however you want to call it, and then a supply area up at 565.20. So this will be my final stopping point. So the way I like to mark these up, I call them supply C line. So what does that mean? Conterminous line. So that's the point of market shift where we had equilibrium and then at one point it just went and then it went down, changing the sentiment and structure to the downside. So those kind of edges on these very large time frames, they frequently become interesting points where you usually see pivotal pops into them and then almost an immediate reaction. When there's no immediate reaction, that also gives you data. So it's like, okay, well, maybe people are not strong enough to sell right there. And in that case, you have to have a look at the quality of the demand or supply in question and see whether you analyze it properly or not. Those are large time frames, but lower time frames are a different ball game because you have a high and a low time frame. You know they're going to take that. There's definitely a cause to run liquidity. Basically, we used to call it stop run in reverse, and it's a very, very old play. So far, it's slow. I mean, it is Monday, which is why I'm not expecting miracles, but this is all I have here as a reference point. I have a low that was broken, quite some volume, exhaustion volume, turned around. We just need somebody to step in. Wake up, guys. Should we give them a shot of caffeine or something? Kick up the bum. Come on, copper traders. What's going on? Are we pushing shorts because of Friday's news? No, we're probably pushing shorts because of the FOMC on Wednesday. That would be my guess. Because a lot of the times ahead of the big releases, you will have unwinding moves, and we have a bit of a double whammy. So we have FOMC on Wednesday, and then we also have the end of the month on Friday. And it's a Friday, end of the month. So that could get very interesting. I wouldn't be surprised if I see a whole bunch of people just bailing out of positions. Doesn't happen every single end of the month, but it might happen today. It might happen this week, purely because of, Friday, FOMC, blah blah blah, last day. Yeah, we'll see. Let me just put a line on my other chart as well. All right, let's have a look at chat. I hate to ask, but any chance NQ was asked before? Well, I will say I'm not an NQ trader, right? So I am I do look at equities, but I hate looking at NQ. I can have a look at it for you because I am on a combine, but I actually don't pay on my live for that feed. I mean, similarly to ES, it opened with a gap. What do we have to the upside? Nothing. See, for NQ, I think we would need to maybe go down to the intraday levels on QQQs or NDX. Let me try and get that. Purely because it's already come up so much over Asia. Let's see what the intraday camel flows is saying. Okay, that's a bit more sane. So, intraday gamma flows. So we have a call wall that was basically around 25, 800. Obviously, it's gone above that. If we're going to nitpick, 25, 815, 816 was the converted one from the QQQs. And then lower down, we actually have GEX3 and GEX1 sort of around 720. To the upside, we do have potential for a move all the way up to 26,050 with a minor GEX level at 25,920. So that will be the options projection. But yeah, still some room to the upside there. Maybe a test of the 815s, 800s, then a further upside move. But just be careful, because if they start melting through 700, 715, then you have room at least to 600, and then really nothing until 450. So it just depends whether they want to close that gap first. Maybe at the open, New York Stock Exchange open. Yeah. All right, we've come to the end. So let's. What is HG? That's copper. But yeah, we've come to the end. So I might close this, might let it run. I don't know. Maybe I'll just leave it as an idea, because it is livening up. But yeah, so let's see what this week brings us. Like I said, last day of the month can be pretty interesting. And be careful, because we have FOMC. Don't trade directly into big releases. It's never a good idea. And that's all I have for you today. Hopefully we had fun together. Thank you for spending time with me for the Euro trade. I will wish you a lovely week. Trade safe. This was the Euro trade. I'm Marcus Tokadi. I will see you very soon. Take care.